Hey there, this is Alex Kluge. I'm here from Toronto Home Experts, and I'm here to dive into the March 2023 Toronto real estate update. But stay tuned for the very end of this video, and I will also talk about my spring predictions. So, what do I think is going to happen this spring in the real estate market? So, stay tuned for the end of this video to find out just what I think. Okay, so let's talk about what's happening in March. So, we're looking at the stats from March. Really, I think there's two main themes that we're going to talk about fairly extensively, and that's having a pretty dramatic impact on real estate right now in Toronto. Sales volume is down. So it's down, 35% from last year. Last year, March was sort of what I call the peak, or maybe just, a few weeks past the peak in third week of February, if you want to be absolutely precise. But March was a fairly active month, as we can see. And now we're looking at the sales volume numbers, and it's actually the third lowest March sales volume on record since 2002. So the other two are 2008 and 2009, and they weren't much lower than this. So, anyways, this is telling me that, okay, volume's down. Well, why is that? And the primary reason why volume is down is because there's a lack of new listings. Like, look at this chart here. We're down to 11,000 new listings for the month of March, right? And we were comparing it to last year, like 20,000, which was, I would say, a fairly average March. That's why there's just not a lot of new listing inventory, and so that's putting a lot of pressure on obviously sales volume. If you don't have enough property to sell, volumes are down. But we're noticing that buyer demand is coming back. Certainly, I'm not saying that it's back to where it was in early 22, but we're seeing that buyers are now comfortable with the mortgage rate environment. Like, Bank of Canada has signaled that likely this is it with rate increases, and so we're probably going to stay at these levels for the next little while, and then hopefully we'll see a gradual decline or rate reductions in sometime in 2024. So a buyer's like, okay, rates are staying the same. I can afford this payment. There's not a lot out there, so that's putting a ton of pressure, and so that's why we're seeing sort of the numbers that we're seeing. So just for some context in the sales price stuff that I'm going to get to very, very shortly. So anyways, this is the lowest new listings we've ever had on record. So pretty significant decline. And, the fact of the matter is people don't want to sell. And so, I know there was some talk perhaps mid last year when rates were climbing very aggressively, and some economists are suggesting that we're going to see perhaps those that are up for mortgage renewal that wouldn't be renewing, and we'd see a surge of new listings, but we haven't quite seen that yet. Is it coming? Who knows? But it really depends on what we're going to see macroeconomically, and where fixed rates and variable rates are going to go in the medium to short term. Okay, so active listings, unsurprising, is at 10,000 relative to new listings at 11,000. So that doesn't mean that, like, whatever that number is, 97% are selling actually, but it's just showing that of the new listings, there's not a lot that's sitting on the market. And so when we look at one of the stats I think is most important when we're looking at absorption rate is the sales to new listings ratio. So we're sitting roughly at around 61% for the month of March, which is actually very good. That would represent the sixth highest sales to new listings ratio over since 2002. So that's certainly very positive. It's a positive development in this real estate market, and we have not had a lot of positive developments over the last, call it 11 months or so. But encouraging to see that the sales to new listings is increasing, meaning of the percentage of properties that are on the market, 61% are selling, and that's for the GTA on average. Certain pockets are better than others. Again, geography matters and asset type matters, whether you're selling a freehold or condo. Those two numbers are quite different. So anyways, things to think about is that there's not a lot of inventory, and that's really driving buyer demand, and that's also having an effect on real estate prices. So for last month, if you remember, we saw a first price increase since July of last year. Actually, no, that's not true. We haven't seen a price increase since March of last year. So basically, February, March was the last increase, and then since then we've seen price decline. So January, February, we saw our first increase, and February to March we saw our second increase. So that's a positive sign. So let's not get out the balloons quite yet, but prices increased by 1.2%, which I think is a positive development and showing that possibly prices have stabilized. I think my personal opinion is that, we've seen the cycle bottom already. I think the cycle bottom was probably sometime in December or November of last year. And we're now seeing that, there's a little bit more confidence, so that we're seeing steady increases. I don't want to see what we saw last January, February, and March. We saw some extremely aggressive price increases, and we don't want to see that. So 1.2% increase month over month is actually very good. That's, I think, good. We're going to want to see modest increases. I think that's healthy, and we're not going to see them every month, but my prediction, actually, now we're talking about predictions, it's a little bit of a sneak peek, but I do think we're going to see price increases, modest increases this spring, call it through end of June. And then we're going to probably see some flatlining. Typically summer prices don't increase. Typically we sort of see what I call market stability. Prices, maybe there's a 1 or 2% variation thereabout, but typically, and then the fall market is a different story. I don't know what yet. I'm not ready to make my fall predictions yet, but certainly this spring, one thing that I want to talk about is average price, and I think that's really important to understand what's going on. So this price here, this graph here, actually is I don't know if you can see it on your screen. Zoom in if you can, but this actually shows a great picture of what we've been experiencing, over the last year and a half or so. So we saw that huge run up in price until March, and then slow decline since. So you'll see the last 2 months have been sort of that increase in modest increase, but I think that's positive. If we would have seen gradual declines through the spring, I think that would have been a lot more bearish in sentiment. But the fact that we're now in a stable interest rate environment, prices are stable, and the other thing that we're noticing too is, depending on the price point and asset type, whether that's condo, freehold, there are multiple offers. Multiple offers are very, very commonplace at what I call the entry-level properties. So entry-level freehold and entry-level condos, those are the two most aggressive classes of assets within the Toronto real estate that are probably the most in demand right now. And it makes sense, right? There's always going to be buyers looking to get into the market. So typically, the entry level is usually one of the more active markets. Rents have increased substantially. So buyers are rents are up 17% or whatever they were from last year. Maybe I should buy because, I'm building equity and I'm paying down my mortgage. And so prices have, sort of seemingly bottomed out. So that's one thing that we're seeing. And on the freehold side too, everyone wants the dream, right? Backyard, plot of land in the GTA, so that is always going to be demand on the entry level. So when I'm talking about entry level, depending on the neighborhoods, it could be, bungalow, it could be semi-detached or detached, depending on the pockets of the neighborhoods in Toronto. So, but what I'm seeing is typically the closer to the downtown core, the more active and in demand those properties are. So again, each pocket is behaving very differently. So if you have questions on what specifically that means for you as a buyer or seller, we're happy to have that consultation. So we'll get to our coordinates shortly. But when we're talking about the average home price difference, look at these differences year over year. There's some pretty steady declines. We're down roughly 14.6% average price from last year. So It's not like, oh, let's get the the exciting news to share that prices are rebounding. Like, prices are still down, right? Like, as I said earlier in many of my other videos, like, I don't think that run up in price earlier last year was healthy and warranted. And if you look back on my videos, I did mention some caution signs, because it's not healthy and that's not normal. And so, like, that pullback was not entirely unexpected given the aggressive run up that we saw for the first 3 months of last year. All right. So yeah, back to predictions. Okay, so we talked about average price. So I think we're going to see an average price increase this spring of 5%. So that means from where we are in March to where we are at the end of June, I believe average Toronto real estate prices were increased by 5%. So it's modest, but I think that's encouraging. I think that's what the market needs. We don't need to see these aggressive price increase like we're used to in the past during the pandemic pricing. So I think we're now going to see some positive momentum. I do think that the theme for this spring is going to be a lack of inventory, and that is going to really drive up those prices. So unless we start seeing an aggressive increase in supply, which I don't see, I think we're going to continue to see very, very tight inventory levels, and that's really going to be the main theme for this market this spring. So I'm really excited to see the numbers. Like, I know we've been comparing, last few videos, like, to the average price and volume and stuff like that from the year preceding, but now that we're getting into what I like to compare to is really like the May and June numbers. Like, those are going to be really interesting, because that's when we saw some significant slowdown, and I still think actually our volumes and new listings are going to be below those levels. But yeah, that's going to be, I think, the main prediction that I'm willing to stick to for this spring. Interest rate prediction. What do I think? I think Bank of Canada is standing pat. I don't think we're going to see any more variable rate increases. As you know, the fixed rate mortgages are very much tied to the bond market. I think probably we're going to see a slight decline in mortgage rates, not significant, but we're going to see a slight decline this spring. So nothing too exciting, but still we're going to see the 5-year mortgage rates in the sort of mid to high 4 range. I think that's where we're going to probably stay this spring. So anyways, thank you very much for tuning in. Here are our coordinates. So if you have any questions or looking to specifically understand what these numbers or what's happening in the market in your local area, feel free to reach out. We'll happy to have that consultation with you. And anyways, look forward to recording next month's video. Thanks so much for tuning in. Bye for now.